All right then. Hopefully everybody's having a good day today. We're going to try to get you in and out of here in, oh, I don't know, let's say 4 or 5 hours. Just teasing. Our presentation should take 20 to 25 minutes, and then we'll open it up for questions, and we'll answer as many questions as we have time. And we do appreciate the questions. We really do appreciate you taking time out of a busy day to listen to our product. And we will interject a lot of things that I consider more educational on this line of business. But it is going to be a lot of product specific stuff today because we have a new carrier and a new capacity, and we're back in the marketplace. So we're pretty excited about that. So today we're going to focus on residential builder's risk. We'll define that as we talk today. But I will say, just keep in mind, it's really talking about the lower value of builder's risk. You know, we're not insuring the billion-dollar structures. This is a different class of business, a different space. So today, residential builder's risk. Let's talk about it. We're going to take a pretty deep dive into that. Oops, I think I went too far. There we go. First of all, a lot of good news on the economy today. We did a presentation a few months ago, and things were looking good, and they're still looking good. Housing starts are up dramatically over last year. We kind of know why, but the idea is housing is looking pretty strong. I just got done reading an article where they're projecting pretty good growth in housing starts for the next 3 years, which is great. We'll get into this why we think housing is the way it is. Inventories are very low, demand is very high, and that's kind of what we're looking at on housing. Some of the things you hear about in the news today, the cost of lumber has skyrocketed. I've heard 50, 60% increases in lumber prices. And obviously, what does that do to single family detached housing? It increases the cost to build a house. So we're seeing that in our policies that are quotes every day. The values are going up. The average cost to build a new house now and sell it in the United States is at an all-time high. It's over $400,000. So we're looking at pretty nice houses out there being built. At the same time, there's a shortage of skilled labor. Because of the pandemic, we lost a lot of they didn't pass away, they just went into other industries and did other things. So we have a shortage of electricians and plumbers and interior trim carpenters and so on and so forth. So what that does is it increases the time it takes to build a house. So now the cost of the house has gone up, the time to build it has gone up, and those are both rating bases that we use in builder's risk. So we're starting to see that take its effect on what we're writing. Maybe 7 or 8 months to build a house. Now it's taking a year or longer. So you need to make sure the builder's risk you're selling can be extended. The deal you have with your underwriter, you need to communicate with your underwriter. 93% of detached single family homes in the United States are frame. And that is Maine to California to Florida. They build houses in this country out of lumber. When you're in Europe, it might be flipped. There's a lot of masonry homes. But here we build them out of frame. So that's just if you're going to write residential builder's risk, as an underwriter, you have to wrap your a brain around writing frame structures. So we don't shy away from that. That is the market that we have. Potential premium. I just wanted to throw this out here because it's one reason we're talking about this today. You think about our minimum premium is $400. We love to write small accounts, and you think, well, what's out there? Well, what we're going to talk about today that fit the parameters of our program based on housing start predictions and the cost to build, the length of the projects, we estimate that the potential premium is $1.5 billion in potential premium. So that's one reason we're having this meeting today to talk to you guys about this, is there's that much opportunity out there. What's interesting about housing as I look at it too, it's not regionalized. Granted, there's a lot of houses being built in the South, a lot of houses being built in coastal areas, but there's also an inordinate amount of construction going on in Phoenix to Las Vegas to Denver, Salt Lake City, moving east, Chicago, Detroit, Cleveland. All of these places are having a very strong housing market these days. So it's good news from the housing standpoint. Average premium per policy. We're looking at policies that probably average, around $1,000 a piece, is what we're talking about today. So the key is, I think about an agent, I think about you guys, and what's it going to take First of all, these things have to be easy to quote, bind, and issue. If they're not, they're going to go somewhere else. We recognize that. So we want to make this as easy for you guys as possible. We're going to have a little show on our new portal today, and we're very proud of that. We've reduced the number of questions. We don't ask a lot of questions. It is quote, bind, and issue. We had an agency the other day in Nashville, Tennessee, issue 9 policies before 8 o'clock in the morning. So that's pretty good. She came in, started cranking them away. Each one took her a couple minutes. That to me is ease of doing business. And what we're looking for is what I call pass-through risk. These are the structures that don't require extra underwriting or canned form. It's already baked into the coverage form. We have high sublimits, automatic coverages. So we've designed this to be pass-through. And all that means is no underwriting holds. You as an agent can enter the data, hit a button, get a quote, hit a button, and get a policy. We want to write those risks all day long. So we had a number of policies that were issued over the weekend. So we love doing that. What about the West Coast folks? They're used to the East Coast companies closing early. Well, now they can go in anytime, 24 hours a day, 7 days a week, and quote, bind, and issue. So, we're pretty excited about that. So without further ado, I'm going to introduce Donna Berry. She's the underwriter on this program, and she is the resident expert on V-Squared, our portal. So she's going to take over for a few minutes and walk you through a pass-through risk. Take it over, Donna.
Thank you. Hello. We are really excited to walk through our V-Squared demo. As Jeff mentioned, we want to be a solution for your ground up residential risk. So let's go ahead and get started. So first you want to log into V-Squared and click on the Builder's Risk icon. The first question we want to collect, or the first step, is for the general information. So just some real basic information about the insured name, mailing address, builder information, their address, collect some information if they've had, if they have 2 years experience, if they've had any builder's risk losses in the last 3 years. So just some real basic, simple questions. Property under construction. This is the address for the property that the construction is going to take place. So this is a ground up new house, new construction. Say yes to it's a 1 to 4 family detached structure. For this example, we have 1 structure for this location. The next is project information. So what is the construction type? And you see that we've provided the definitions there. We do want to be your market for your ground up frame construction. We do need the protection class. And as you notice throughout the process, there are some little question marks behind some of the questions. And that just provides some additional information on what the question is looking for or what information needs to be provided. So we've provided some helpful tips throughout the process. And then just some additional questions about the specifics of the structure, the square footage, the start date, the end date. The next is the limit. So what is the limit for this project, and the deductible. On this screen, we've also listed all of our automatic coverages. And the next step are the optional coverages. The final step is the additional interest. So if they have a mortgagee or loss payee, you would click Add New and then Continue. Once you hit Continue, the quote will be generated for those pass-through. So this will provide the limit, the deductible, the premium, any additional premium, then the total premium, and what term was quoted. So this one defaulted to 12 months. That is our standard term. But if you do need a shorter term or a longer term, give me a call and we will get that updated. So this quote looks great. We are ready to issue. So we say select to issue, continue. Select the billing preference of either agency bill or direct bill. The final step is selecting the effective date. So you enter the effective date. The system will default to the expiration date based on the term that you've selected, and select issue policy. Once you land on this screen, the policy has been issued. So once you get to this step, also check your email, because you will have an email with the policy package and the billing notice that will be emailed to you to present to the client. and you are done. So that is our V-squared demo. Jeff, I'll turn it back over to you.
Thank you, Donna. And it is interesting that it is that easy. So, I mean, we just want to stress that this is what we're looking for. You know, where certain parameters are built in, there's cascading of questions. If you get a more complex risk, it'll handle that. But we're really looking for that easy pass-through risk. We want to be your go-to market for all of that business. So now let's say it generates a hold, an underwriting hold. So it's as simple as that. That just comes to our underwriters. They have to look at it and they'll get back to you. And we understand that we are judged by how quickly we get back to you. So we are doing our best to get back to you as quick as possible. Along with that will be flexibility. You know, we do want to write business. So if it makes underwriting sense, we protect the integrity of our program, but it makes sense, we're going to do it. So we want you to definitely keep us in mind for all your builder's risk needs. And there's the 800 number. I'm still old school. I like the 800 number. So if you have any questions, call that number. You will get a human, and we will do our best to answer your questions. And of course, we do have email mailboxes. You can email our underwriters. You can go to the website and communicate that way to us too. Not a problem. So we've kind of handled ease of doing business. And the next thing we talk about in our line of business is the coverage form itself. And the reason I showed you a pass-through was we have 19 coverages that are built in automatically. And for the sake of time today, I won't go over all 19 of them, but I would like to draw your attention to a few of the ones that get people's attention. These are ones that are automatically in our coverage form. You don't have to negotiate with an underwriter. The premium is already built into our rate. I mean, the rate's already contemplated. So we include soft cost, transit, temporary storage, ordinance of law. Some of you are probably thinking, well, I know there's some competitors that include those coverages too. Well, very few can have 19. I haven't seen one yet that has 19 coverages. And then the next way you evaluate a policy is its sublimits. So each one of these coverages has a built-in sublimit. So for example, 100,000 soft costs is built in automatically. Now, if you have a larger project, you want to increase that, let us know, we can increase it. But this is built in. So for the typical pass-through single-family detached home being built, all of these limits and coverages are more than adequate. $500,000 in transit, $500,000 in temporary storage, $1 million in ordinance and law. We have others, expediting expenses, so on and so forth, with very high sublimits. So we're very proud of our form, and by all means, we want you to sell the coverage. Next thing we talk about is pricing. So I think we don't apologize for this. We're very competitively priced. We don't want to be known as the cheapest out there. That doesn't sound right to me. We want to be, how about the most competitive for the exposure? That's what we're looking for. You know, we are long-term. We want to make this thing work. We have a lot of belief in the line of business. If it's done right, it will make money. Rates are based on geographic exposures. So obviously South Florida, a little higher than Chicago, for example. A little more exposure, I would think. So another thing I want to leave you with, and this is just the basic property insurance premise. Donna went over that a little bit when she showed you the portal, but always remember these are the things we need when we underwrite or when you issue builder's risk policies or all property policies. It is the basic COPE: construction, occupancy, protection, and exposure. What is the construction? Frame, non-combustible, so on and so forth. What is the occupancy? Single family, detached, it's a Starbucks, it's a Dunkin' Donuts, it's a warehouse, whatever it is. Protection, and we'll say that for builder's risk, what we look at is the ISO protection class. And that's 1 to 10. You need to provide that to us, tell us what it is, and we should be off and running. And the last is the exposure. And I think what we look at in builder's risk and exposure wise is the geography. Where is it located? Is it on the Gulf Coast? Is it in the Northeast Coast? Is it in Las Vegas? You know, where is the risk? But once we have that basic information, now we can quote bind an issue and we're off and running. The importance of writing these small accounts. Now I'm kind of bringing you into the world of a program manager and of a carrier that plays in this line of business. But the more we write of the ground up new construction, the better it is for the overall program. And I could say even kind of old school, when you manage an agency, if you call me and you have one that's a little out of the ordinary, I'm looking at your production and you've submitted a lot of the pass-through risk and we've written business with you. All underwriters would take that into consideration from an agency management standpoint and say, yeah, we'll do one that's on the edge for you. So I like to always say, don't send all the ones on the edge to me. Just send them, send me your pass-through. And then if you get one that you need an exception on, by all means, call us. And what we're looking for is agents that are going to give us a shot at their entire book of business. All the builders list comes up, you give us a call first. I might even say give us a call first or give us a call last. The old, would love to have the last look. So if you have a risk, and call us and say, can you beat Tumbleweed Mutual at this? We will do our best to beat it. So for the right risk and the right reasons, we've been known to do that. So once again, just reiterating why we think this is why we want to write this class of business or how we're going to go about doing it. Ease of doing business, coverage form, customer service, pricing. So that was kind of it in a nutshell. In 20 minutes, we ran through it pretty quick. What I'd like to do now is open this up to questions of any kind that you would have, and ask away. Darcy, we're ready.
All right, Jeff, here's the first question. So this attendee says, I assume it is for actual building time, or do you not allow prorated terms? While we use brisk markets that cancel prorate, is yours fully earned?
All right, I love giving you the answer. I always say, well, it all depends. So our standard product is fully earned, but we have been known to make exceptions on that. That would be an exception. You'd have to call us, but we do some things at a pro rata basis. That's a good question, and we want to compete in the marketplace. Now, I will say this, let's say the average home is taking around a year to build and we write a year policy. So even if we agree to pro rata, what's that really going to do for you? Probably nothing. Very few projects are getting done early today. That's just my take on things. And if it's truly a 6-month project, we'll write a 6-month policy for you. That's another way of looking at it. So we'll work with you on that though. Good question.
All right. Can you write a partial completed, or are there any PC restrictions?
Okay, so we write a partial completed. So we have a project that was started. Now we might want to know why they didn't place the coverage. Sometimes the builder thought the owner was going to place it, vice versa. Sometimes the builder went out of business. There's all kinds of things I've heard before. But yes, if it's less than 30% completed, it would probably flow through the system, assuming all the other characteristics of the risk are met. If it's more than 30%, you need to call us for an exception. And as I said, always, we've been known to take a look at those. So good question. Yes, we will entertain that.
All right. We had an attendee whose audio went out for a moment. Can you repeat what is the maximum dwelling limit?
I'm not so sure we even said that. That's a good question. So our program currently is 5 million in frame. So we can do up to 5 million in frame. And if it's 5 million frame and joisted masonry, if it's non-combustible, masonry non-combustible or fire resistant, we can go to 10 million. Good question.
All right. Can you extend an annual builder's risk if construction is not completed?
So that's probably a more appropriate question than the pro rata, to be honest with you. So now we write a 1-year policy on that home, and for whatever reason, cost of lumber, shortage of labor, other things, it's going to go over a year. And yes, we can extend that original policy. We can extend it short term, or probably write a 2nd year for it if we had to. So yeah, that happens frequently today. Homes are taking longer to build and sell. So we would do that. Now we could go up to 2 years on our builder's risk, and that's when we have to cut it off after 2 years. Good question.
Okay. Can the homeowner be the builder?
So can the homeowner be the builder? We do ask some very basic questions on the building entity, like how long they've been doing it. Do they know what they're doing? I mean, so if you say, yeah, it's a builder for 2 years experience, we're off and running. So if the owner has an experience building houses, and you can answer that question, that isn't the experienced builder, then that would be okay. Now, if the builder has never built a house before and they watch Tim Allen on home improvement, that's not what we're after. So we need to have a building entity on the project. Now, sometimes it's not the insured, the owner's the insured. but as long as you provide the underwriting information on the builder, we'll be okay. So it needs to be an experienced builder, at least 2 years experience.
All right. Are you able to write in California?
You know, right now we are presently approved, filed and approved in 46 states. And eventually we'll be at 48. We're not gonna be in Hawaii and Alaska anytime soon. The 2 states that are still pending are California and Colorado. And we could talk about those 2 states the rest of the day, but I will say I had a little news today. So one of those states was just approved today, and that is the great state of California. So we still have to get it loaded in our system and test it. So we can't write California business today, but it's imminent because our filing was just approved literally a couple hours ago. So sit tight for you California folks out there. We are in the game soon.
All right. How short can an extension be?
All right, let's say we have a 12-month policy and the home comes up on 12 months. It's been delayed for pandemic reasons or any reason you could think of, but they think the closing is going to take place in the next month. We could do an extension for a month, as little as a month if you wanted. So we'll work with you on those extensions. Now, we don't want to do it month to month and then it goes on 6 additional months. So we're really counting on you to find out what they truly need, but we will work with you on the length of those extensions. Good question.
All right. Is there any appetite for OCP/OCIP risk?
Now you're gonna start asking me liability questions. I like that. Usually morphs into that. So we do get asked occasionally for the premises liability, the OCP, and we don't have a product today. I know there's some good ones out there for you. Now I will say be very careful when you're explaining that to a builder, because it's truly not GL coverage for a builder. It's just premises liability. So we are not a market for that today, but there are markets out there that do that.
All right. Are there payment plans available?
Yeah, depending on the size of the risk and obviously the amount of the premium, we do have some payment plans on the larger risks. On the smaller ones, we prefer just to have those paid up front. But contact your underwriter and we'll talk to you about that.
All right. A follow-up to that, is this direct bill or agency bill?
We will leave that up to you. One of the questions on the portal is, do you want an agency bill or direct bill? You pick. And right now it's kind of interesting on our book of business, it's about 50-50. So it's really up to you guys. We tried to, and that's another way we're trying to be flexible to give you what you want. It's interesting, some agents swear by direct bill on small business, other ones want to still do an agency bill. Doesn't matter to us.
Fantastic. All right, this question might have already been answered, but is there a max percentage that you will write on a construction that has already started?
No, it's somewhat negotiable, but I will say if it ever gets above 50%, we get pretty nervous about that. So we'll just, for 30%, it flows through the system. And then over that, we're going to ask some questions. So it just kind of depends. But it's worth a phone call. You know, if you got one, pick it up and talk to us. Good question.
All right. Now, can you also write commercial risks under your Builder's Risk program?
That's a great question. So today we focused on residential because I just wanted you to think about detached, single family, 1 to 4 family, you know, the homes that are being built out there. But everything we talked about today pretty much applies to small commercial risk. We can do up to 5 million frame JM. We can do up to 10 million on everything else. I can give you some examples of things we've written in the last couple of weeks, from little mini storage places, Dollar General stores, Starbucks, Dunkin' Donuts. We write all of that stuff and we love to write it. So that's a good question. We just focused today on residential, but you know, a big piece of our business is the small commercial risk also. And I will say we see the different construction classes represented in commercial more than residential. So we do see a lot of the non-combustible, masonry non-combustible projects being built. And love to write those. Good question.
All right. What policy terms do you offer?
Well, if you think, if I'm interpreting terms as the length of what we offer, it's really what I'd like to say is what term do you need? We would like to get as close as possible. So if the builder is very, very confident that they can build and sell these things in 6 months, we can write a 6-month policy. If they think it's going to be 9 months, we'll write 9 months. I will stay on the low end of things, especially on the renovation piece, which we didn't touch that much on renovations. And we do like renovations. We can go as low as 3 months on those. So we're pretty flexible when it comes to the offer that we offer.
All right. Is there an advantage to having a builder's risk policy versus a homeowner's policy that is modified for construction?
Yeah, we went through this a couple of months ago when we talked about this, but first question I would ask as an agent, who is my insured? Who am I taking care of? If my insured is the builder, they 100% need a builder's risk policy. All of those automatic coverages that are built in is designed for course of construction exposures. So you definitely need a builder's risk policy if you have a builder. I could even argue if you're an owner of a structure, you still need a builder's risk policy. Sometimes you can get a homeowner's, but things like theft of building materials not installed, there could be a lot of holes in coverages if you have a homeowner's. So I would always recommend a builder's risk policy. And about 1/3 of our book of business is written in the name of an owner, and about 2/3 is written in the name of the building entity. So it doesn't really matter to us either one, but builder's risk is the way to go. It's a policy that was designed for projects under construction.
All right. I had an attendee say you just mentioned renovation, so this policy can also be used for renos.
Yes. So about 2/3 of our book of business is ground up new construction, what we talked about, the single family dwelling being built. That's what we really want to write. Having said that, about 1/3 of our book of business is renovations, and that could be, very simple renovations to a little more complex. We do underwrite those though. So if you're going to submit renovation remodeling risk to us, it's going to hold and we're going to look at it. Now, when I say look at it, we'll pull it up and look at a picture of the building, make sure it's structurally sound. We're going to ask the question, what is the scope of the project? What are they doing? And then we'll price it accordingly. If you have any questions, you have one not sure about, pick up the phone, call the 800 number, and we'll talk to you about that. But yes, we do write renovations, not a problem.
All right. Can you write in protection class 10 in any specific states?
So we consider protection class 1 to 8 as protected. Our rates are pretty much the same on the 1 to 8. Once you enter what we consider unprotected, which is 9 and 10, or some of those split classes, which we did a whole workshop on protection classes, the 4X's and so on and so forth. But if it's truly unprotected, then we do have cascading questions. We ask some more questions about water supply and fire hydrants and distance to the fire department. But we do write 9 and 10. We're just going to price it accordingly. So the rate will be up. It'll be more expensive, but we will do it.
All right, let's take a couple more questions since we're at time. Do you have a supplemental online for accounts that may need to be submitted?
Sorry, I didn't quite catch that. Do we have, what was that?
A supplemental online for accounts that may need to be submitted?
Well, I guess I don't quite understand it. Everything's online. We have a portal. You go in and ask the questions. Depending on the answers, there could be some cascading questions. We do have an application. If you want to look at the application itself, that's on our website. We have one for ground up new construction and then one for remodeling. So if you just want to look at an application, I will say that the application pretty much follows the same flow as the portal. Questions like what Donna went through earlier, same order, property under construction, builder information, so on and so forth. So I guess that might be the answer, but the best bet is always to go to V-Squared, the portal, register, and then you can just enter the information there. It's all stored for you. At the end, you can print off a summary of what you took, what you answered. So it's pretty slick.
All right, let's do one last question. Do you have a list of reasons for delay that wouldn't be approved for an extension?
We have a list of reasons that would not approve for a delay. I have heard some pretty interesting ones. It's kind of hard to defend sometimes. You know, I don't know, Don, I'm sure you're probably coming with a couple of funny ones. Like, we just didn't feel like doing it, and now we do something, kind of a weak response. But you know, for the most part, the delay is of things that we've already talked about. So that'd be okay. I mean, sometimes it's as simple as I forgot. I mean, I guess that's okay. We'll just have to evaluate based on the exposure at hand. So we'll work with you on that. We're not trying to over underwrite this. I mean, we try to look for a reason to write the risk as long as it maintains the underwriting, the integrity of the program.
All right, Jeff, it looks like we're out of time for questions. If you did have a question that we didn't get to, Jeff or Donna or someone on the Builders Risk team will reach out to you after the webinar.
There you go, guys. I just want to say in closing, we really appreciate taking time out of your busy schedule. And Donna and I are here to help you. Look forward to working with you. Take care.